Traders, welcome to it, the first ever Start Swing Trading. That's what it's all about. That's what we're going to do this show on. So we'll be looking into the market. We'll be looking into some opportunities. I will be taking some swing trades along the way. And then, of course, getting to some guests out there like we always do. We're going to be bringing on traders and a whole bunch of experts that are looking into the markets for you guys out there. Like always, that's what it's all about. We're going to go ahead and get into the market. Let's go ahead and see how the SPY overall did on the day. I'll bring up my charts here. We'll get started. Welcome to it, team. And definitely hit the poll. I want to know, you guys swing traders out there? Let's get to the act. I got a lot of yeses out there. So we got some swing traders. I'm excited to get into the action. First things first. Normally, I'm going to be waiting to try to get some swing trades while we're doing this show, right? But there's also going to be times where I can't wait, right? Well, I took a shot already. Let's talk a little bit about it. Right off the hop, we're going to talk about the Tesla short trade. Yes, I said it. This guy over here, short on Tesla. Let's talk a little bit about that. So we took here 211.31s. And the reason why is I started seeing a rejection. That's what this show is going to be about. I'm going to take off my lines and go to the scratch to kind of show you exactly what I'm looking at. So a lot of times when we get stocks that get extended away, right, we need to be looking at one thing. One thing I always look at for extension away is going to be the RSI. RSI to me on swing trades is going to be more about extremes, right? So if I'm expecting stocks to reverse from certain levels, a lot of times what do? Well, I want to go ahead and put RSI, and I want to put a line on the RSI. I want to go ahead and put there a red line at the top, and I could put a green line at the bottom, because a lot of times that's when we're going to get the reversal action, right? This is important. It's not necessarily means 100% of the times you go off of this level. What it does is it gives us description. When does the edge come to the chart? That's the important thing here. So catching up with you guys in the chat. What's going on out there? Walter, Easy, Shannon. Let's go ahead. Let's get to the action. All right. So Tesla, right? What can we see on the chart, right? Let's keep it simple. Let's first draw our resistance, right? Resistance is up here towards these closing, especially the 7th, right? You got a high there of 234.57. To the right of that, you got 229s. And to the right of that, you got 237s. So we didn't get to that level, right? Then you can go ahead and you can draw some lower levels here. So we're going to draw some lower levels to support between that range, right? Then you start looking to the right. We just cut through there, right? And now one thing that I started looking at was, would we get the 200 fake out to the upside and a hit right back down? So one of the things that I was looking to the left, I saw Wednesday's high, 213.19. What did I start seeing? I started seeing the market overall start pulling back, right? One thing that I'm clearly looking for also is a closing below the 9 EMA. 9 EMA helps me look for trends to go ahead and buy the dip, but can also look for the turnaround in the market, right? Well, Tesla started fighting. It did the move here on the move for 3. I talk about my rule of 3 all the time, where I'm trying to see stocks go up, right? Try to break through some highs, build up those highs, make the attempt, but not be able to get through. A lot of the times we're going to be looking for this to come into play, especially with stocks that are trending, right? Well, clearly we were trying to get up there. We pulled back here. We tried to get back up here towards the 210s, 212 area. And that's when I started feeling like, okay, now we at least have some levels to go off. We want to wait for this 211 to break. So I waited for that 211 to break first. And as soon as we broke that, as we started coming back above the VWAP, started looking into those shorts. Now we're looking to get down here and close below the VWAP. If we can just do that, we could start seeing the trend let go. A big thing for me is just going to be holding it to that high. If tomorrow we're over that high, we can get out of the trade. The most important thing for any swing trade for me is always keeping the risk small at first. What do I mean by that? these aren't big positions for me by any means. And when I take swing trades, one of the things that I want to go off of is not just only technicals, right? Here I'm using a little bit more of the story psychology that it's just been straight up FOMO ride up, right? Well, eventually we can get a pullback. If you guys know, I talked about shorting earlier this week, and I'm sorry if my internet's cutting out there. It looks like I have some instability here. I'm going to cut out some of my, close out some of my windows here. Just give me a second, team. Making sure you guys have good internet here. There we go. That should make things a little bit better. All right, let's keep going. So one of my biggest things, of course, is that I did short Tesla on this kind of red day and was able to make some money on it. I think the important thing is always knowing where you're going to cover if you start getting the squeeze. One thing with swing trades that I think is very important also is not losing once I have some profits. So right now, I haven't been able to take profits, but I can tell you right now, we're getting to that point where we can take some profits, especially as we cut through 207. So a lot of times for my swing trades, I take first profit sometimes as a day trade and then let the rest of it become that swing trade. If I can get the momentum to go in my favor in the intraday where I could take some profits off and then hold break even from that point on, I'm going to do that because it definitely benefits me. And like always, you guys don't have to trade this way. The only thing I can always give you guys is how I take an approach. And then from there, you guys make your investment decisions, right? We'll see if we can get through that 207. We have a low there of 208.10, right? Opening price is very important too. 208.97. Can we close below that? That's going to be a good outlook here. We'll see what happens here in the Tesla swing. But like always, if I could take some profit and hold break even, what does that do? It takes the pressure off me. And a lot of times where I've gotten a lot of great gains is by getting into a position, taking a little profit, and letting that last little bit become the runner. And I think this is important. That's where I really have expanded my profits, where I've gotten back on certain trades, way better than that 4-to-1 return. We're talking 6, 8-to-1 returns, right? And so with swing trades, I'm always thinking in that 4-for-1 mindset. And I'm trying to get here where I only need to be about 33% accurate on my swing trades to end up into the green. So I just wanted to quickly today kind of go into a little bit of my strategy. We'll be bringing on traders in just a second to take a look at what they're seeing out there. But like always, you guys choose your own investment advice. We're going to get back to the markets. Let's take a look. Overall market now starting to get a little bit of a bounce there. We'll see if we get a 3 p.m. recovery. It's just been a slow leak down all day, right? You guys can see that in defensives leading us. Energy right behind that, still down on the day. Every single sector is red from the open. What's red the most? Basic materials selling off. Technology selling off. A lot of this was the strongest areas, right? Well, now we're starting to see them start getting weak, right? And I think an area that is very important to watch is the consumer cyclical area. Why the consumer cyclical area? Because it's very high beta. And what do we mean by high beta, right? Well, high beta is all about the stocks that get that movement, right? And I think that, like always, one thing that we want to be looking at is, are these going to be the stocks that rotate the hardest against the market once we start to turn? Well, clearly we're starting to see that, right? Yesterday, you could see consumer cyclical was starting to struggle. Will we start to crack? I think this is something to keep in mind. And like always, you need to have levels and be looking at industry charts. If you guys see, there's something that I always like to do is looking for rotation. I'm going and starting from a backwards approach, right? We're always working from the macro into the micro. So I'm working from my sectors into my industries to my stocks. Very important to try to look at the market like that so that we can catch industry-wide moves, right? That's even better for swing trades because then you can open yourself up to the best positions or the best stocks that you think are there, or maybe using any ETF vehicle. I don't necessarily use ETFs for swings too many, but I could choose the best stocks in that industry and separate there, right? The basket approach, right? That's another way to swing trade there. Now, I did see a question in the chat. I want to go ahead and address Bob Miller. How do you know which time frame to be using? I see you bouncing back and forth from the 15, 5, and 3. What I want to use for swing trades, right? Swing trades, I'll tell you exactly where I see my edge, Bob. For swing trades, I see my edge using 15 hourly level, maybe the 4-hour level, just because the way that it sets up, it cleans up a little bit of that hourly chart, and then the daily working backwards. Really, for swing trades, I don't want to be in a shorter time frame than that 15-minute. Why? Because I'm looking for bigger range moves. I am not looking for 1-minute swings. That's not what I'm into. I'm looking for pattern breakdowns, pattern breakouts, and a lot of the times, sometimes even reversal trades, right? That's what I'm looking for when I'm swing trading. And a lot of the times, we're going to be taking profits and letting runners run. That's what we're going to be looking into. I'm glad I was able to answer that question, Bob. And if there's one chart that I think is the best for me on swing trading, it's the hourly chart, not the 15-minute chart. Why do I like the hourly chart? A lot of the times we get these deep time frame pullbacks right out the gates at the open, and they come back down to hourly supports. And that's where you see a lot of those green to red, those red to green moves where people buy that dip and come right back up. I have taken that approach before. When I do like to take that approach, I usually look for the stock to have had a really nice bullish setup and a washout at the open as I go to try to buy that deep time frame pullback on the hourly. And you can do this with a lot of stocks. Like I did this for a day trade yesterday, but like on Uber yesterday, right? Yesterday it did a deep time frame pullback to that level. It could have been on the 15-minute. It could have been on the hourly that you saw this, right? It really doesn't depend on which one. You would have saw it on both charts. But if you look at yesterday, Uber opened up. Where did it open up? It opened up at 37.40. It came back down into the prior day's hourly range and bounced off of those levels. That can give us an ability to buy the dip on that and swing it back towards the highs. You can see here, what does it do? It comes right back to the high there. And yeah, it sold off today a little bit, but you could have sold back to that high. And I think that that's the important thing to be looking at, right? So you can see how it attacks those types of pricing. You want to be looking for deeper time frame pullbacks, especially when I'm swing trading, so I don't get caught in these short time frame pullbacks and then just watch it wash out to the deeper time frame. All right, let's go ahead. I will want to give you guys one more swing trade that I'm in. And the reason I want to bring up this one right now is that technically I'm still in the red on this one. So I want to give you guys the outlook here on UNG, natural gas trade. And in a few minutes, we'll be joined by Joe Average Trader, a day trading expert, and looks into swing trades. So we'll be joined by him, taking a look into what he saw on the day. Stick around for that, team. Now, UNG, I did take the shot on this one. I'll give you guys the levels that I've been looking at for a very long time, right? So a very long time, since about September, I started looking to see if we were going to get this big pullback on UNG. That was over here around the 891s. So as we came back down through that level, I'd look for reversal signs. This to me was the first reversal sign, the bounce off of 8. As we were coming back up there towards the 9, I started adding into the pullback. I've been adding on this pullback the whole way down. The lowest entry I have is at 825. So I've been looking to see if natural gas is going to get that lift. Of course, I'm also taking a look into the futures, and the futures don't look that great on natty gas. I think I saw it down there at 243 right now, not really getting the lift. And for that being mentioned, I just want to bring in the chart right quick. I don't have the futures, so I'll use FinViz to kind of show you that, right? And is this going to kind of get that reversal action? I know it's a little bit of a long shot, but the only thing that matters to me is having a level to go on. So right now, my average is 847, and I averaged in on the pullbacks. A lot of times also for swing trades, I like to average into the trade as long as I know exactly what my out is going to be on the downside. And I think that this is what really matters. A lot of times I also say that we're not going to have perfect timing. I try my best not to worry about perfect timing, and that's why I size into trades versus just taking that full sizing mentality. Like let's say for a UNG here, I went in it in fifths. I took 5 entries to get my average to 847. And yes, this does increase sometimes the risk. As long as you know you're out, you should still be getting out at the same level. So if I would have not got my entries down here to 825, so be it. I still saw my out here at the 791s. And if I would have got an entry at 825 and it would have gone through that, I would have got out. That's what matters to me, is always understanding where your out is. Now we'll look to see if UNG can get back above 9. If it gets back above that 9 on the daily, that's where we can really start seeing it lift. And then what am I also seeing? Extreme on the RSI. I talked about it earlier. RSI for me only gives us what? Gives us edge on the extremes. I feel like it's already gone past the extreme. And if anything, it's starting to show a little move back. $10 will be the first profits on this one. We'll see if we even get up there. Still going to take a little bit to get it back into the 9s. And right now, still in the red on that. I can stop out. We'll always know our out. That's what matters to me. All right, really quickly before I get to my first trader, I did want to kind of show you guys. I already showed you guys the cyclicals, how they're dropping a little bit. Look at the industrials. GE looks interesting to me. I didn't take this swing setup, but it looks interesting. I'll show you guys that right now. I did swing GE earlier in the kind of last week on the 17th and was able to make a profit on this one just because it's extended on the upside. But I do think that GE could fall right back down through that 80 and come back down towards those lows. So I'm going to keep this one on my radar, but we'll see what happens in the diversified industrials as you start seeing stocks like Honeywell also approach that 200 support. If that breaks, I think we'll get through the 50% retracement where we bounced last time on the move. And you could come right back down there towards, first stop is going to be for me, back down towards 194 on Honeywell, and then could come right back towards the 180. We'll see what happens on stocks like GE and Honeywell. Well, that's going to do it at least for the first talk on the swing trade action. I want to go ahead and bring my charts down and bring on a guest. Like always, team, we want to go ahead and bring on traders for you guys. So if there's any swing traders out there or any traders by all means that you guys want to go ahead and bring on to this show, please let me know. I'm going to do my best to reach out and bring on all the traders that we can. So I'm excited to go ahead and bring on my friend. I call him my friend because I've been watching him for longer than he's been watching me. Average Joe Trader. Let's bring him on here. How are we doing today, Ed?
Hey, what's going on?
Hey, it's good to have you. It's good to have you in the stream. I'm definitely good to see you. And how was the trade today for you?
It's going great. Netflix is playing with my emotions, but it's early on, but it's been going great.
All right, so it looks like today we got a little bit of some reversal action. Looks like you're talking a little bit about Netflix. I can bring up that chart here, so I'll bring up that chart. And what kind of levels are you looking on Netflix?
Netflix, I had the first level was the 369.02, so daily pivot, and then the 367.02, and now it's just almost how low can you go? Looking for it to sell off into the close, but
I did see Disney's
early.
I did see Disney coming down fast there. I don't know if you caught that report this morning, but definitely Disney coming down fast. That showed me a little bit also. I mean, I don't feel too hot.
I heard you this morning. When you were talking about Disney this morning, I heard you.
Yeah, and my thing is content spending, right?
Yeah, and I took it off this morning when it started tanking. I had some left over from yesterday's earnings and was looking to see if it was going to gap up, but we killed it this morning, right out of the gate. And I was thinking, I was like, well, Mitch did it again.
Yeah, definitely. I mean, at the end of the day, one of the things is this market is really hard to judge, right? Because even when bad earnings have come out, we've seen stocks rip. When good earnings have come out, we still see stocks going down sometimes. It's just very difficult, especially off of the earnings reports. I think one of the things that we always need to consider is where was the stock before the earnings and after the earnings, right? Because if the stock was pushing before the earnings, now continuing to push is now the time where they sell the rip, right? Because a lot of traders go looking into their calendars, and I can't blame them. I mean, we have them too, right? We start pulling up our earnings calendars and we're like, who's coming out on Thursday? Who's coming out on Friday? And they start targeting those types of plays, right? And driving it into the name. Seems like that happens on a lot of these stocks. And then sometimes we can get that downfall. But I wanted to give you the floor a little bit, Ed. So what types of moves are you maybe looking at? What other names are you looking at right now?
Well, today, for this week, I was looking at NVIDIA. I knew I was going to be in and out of town this week, and I wasn't going to be in front of the computer until later in the week. So I like NVIDIA, and I like the window of opportunity that it had. I felt, and looking at some of the option activity, I felt we could get to 250 by the end of the week. But it kind of slowed down yesterday, and I noticed the momentum shift this morning.
Yeah.
So I took my last profits on it this morning. And, obviously it was right on time because everything pulled back today.
Yeah, everything is pulling back, and just to kind of note that I'm keeping a close eye on my Tesla swing. We did get to 207.30, so almost to my first profit. That would be 207. I love to take first profits on swing trades. I don't know how you approach swing trades, Ed, but I love to take some first profits off and then just hold break even on the rest. How do you like to approach some swing trading action?
I like to take profit. That's our job. So I will take profit. And even though we have that final target that we're looking at, I'm going to work the profits on the way up because you never know what can happen. Just like today, I had no idea we were going to fall apart. So
have you been doing a lot of swing trading as of late?
Not as of late. I'm just getting back into it because the market just wasn't conducive to what I like to do. I'm purely a technical swing trader, and I have just 3 strategies that I use. And with the market trading the way it had been, I just kind of lost faith in it. We would get a move, but I knew it wouldn't be enough for the risk that I was taking. So I've been waiting for the market to get back and kind of make the moves like it's been making.
Yeah, I mean, we definitely rode that January effect to the extreme. And I feel like, I've been riding with the momentum. I've been telling people also is just like kind of stay with some like quick moving averages, things like that, to kind of keep you with the trend because the trend's our friend, right? But until it isn't, right? And that's the thing I think that a lot of traders find it hard to do is when do we cut the positions on like these trend following positions? What do you like to do there, Ed?
What I do, I try to use a technical indicators such as a moving average or something that could be following the trade. And if I lose that technical level, I tend to take it off. And even if it does come back, I can always get back in and catch the rest of the trade. But I like to use a technical level. If not, then I'll start looking at the 1 minute, not the 1 minute, the 60-minute chart, over the last 5 days. And if I start to see, a big shift in momentum and the trend going the opposite way, then I'll likely kill it.
I love it. Love it. Like always, like one of the things with swing trades, I think that's very important is to be flexible, right? Like it's okay to stop out, especially a lot of times mine are kind of more like day trades turned to swing trades. How do you like to approach, especially early on in the day, Are you more just day trading early in the day and then looking for swing trades, or do you kind of turn sometimes day trades into swing trades?
But the swing trades lately have been off of earnings. I like to trade after market earnings, and I have a set strategy that I trade. And so if the chart sets up, I'm going to hold it overnight, just like Disney. The chart was set up last night, but it just didn't follow through this morning. But that's kind of what I've been doing lately, and just swing and day trading during the day.
Love it. Love it. So I do want to give us a little bit of an update, and boom, shakalaka. Let's go. Let's go. You guys know what that is.
Boom, shakalaka. Yeah.
Let's go. You guys know it. The dark side is here. That's called the money, 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 money. Not bad. I got first profits on Tesla as we cut through the 207 there, took their 207.02s. So I took some profit already. Remember, entry 211.31. We're starting to cut through. And now what I can do is just be break even on the rest. I love getting into this position of strength. I call it a position of strength. Why? Because my mind cannot worry. I can go to sleep today and feel comfortable. But if I don't take those first profits, I'll tell you the truth. I sleep a little bit nervous. Start thinking about the chart while you're sleeping. You know what I'm talking about. You traders out there that are in your pillow thinking about your trades. It happens to the best of us. One of my favorite things is once I'm in that first profit is just break even. From that moment on, the stress, you can even push it off your shoulders and then see where your profit targets are going from there. All right. Ismail's like, sell the rest. Nah, man, we got to see if we get a continuation. And that's what I think a swing trade is really all about, right? Is giving yourself the opportunity for the extension in your direction. Sometimes we're not going to get it. That's the truth. It's just going to go to support, the next layer, and bounce back. And then you're just going to be, sometimes going to have to stop out. Now, Ed, one thing I do want to go ahead and mention is that you're part of the book club, right, my friend?
Oh, yeah.
Trading in the Zone. I love it. Love it. Love to see you on Trading in the Zone. You actually joined us on the last episode. So excited to see you keep joining on Trading in the Zone. And we're going to have you back on here on Start Swing Trading. And who knows, maybe next time we'll get Joe to bring a swing trade for us, at least just for today. It's been a tough day. I'll definitely say that. So, Joe, appreciate you coming on to the first episode.
Appreciate you having me. I'm happy because I'm about 3 cents away from hitting profit on Netflix. So
Netflix. Let's go back to that. What's your target on that one?
360, 250 is the next target. So
it's definitely starting to crack there.
Yeah, we're getting close.
I like that one. That one's been running for a long time. I mean, that was a huge gap fill that it had. I definitely didn't think it would get up to the next gap on the chart, up to the 500. So looks like we're getting a little bit of a turnaround on that Netflix. Appreciate you joining me today, Ed. We'll take a look at Netflix if it gets to there. And always enjoy the day, man. I always appreciate what you do for traders out there. And I want to give you a second. Mention, what do you do for traders out there that might want to join your room on Average Joe Trader?
I'm a teacher by profession.
Love it.
So, I would say I'm a better teacher and mentor than I am a trader because that's, my background. Mm-hmm. But I think that's helped me understand what traders need in order to, get to the next level. So I focus on coaching and mentoring the new traders, helping them build a foundation that they need and developing the right mindset.
Love it.
Trading is relatively simple in terms of the action part, but it's the mindset, being able to come in and do this day in and day out without deviating and, being able to filter out the noise. All of that is key. So
that's what it's about, Joe. Joe, I tell you, at least from someone that's followed you from a long time, and I've been watching you for years, literally years. And I can say that there's very few out there that I truly support because I see them working hard, not to do what? not to talk about themselves, not to talk about so much their trades, but more along helping others. I appreciate you giving back to retail traders out there, helping coach and mentor those traders out there that really want to push their skills. So I suggest you guys give them a follow. I threw up that Twitter there. Let's give them some good follows, and we'll bring you back. Average Joe Trader. Ed, we'll have you back on. And like always, take care, my friend. Keep teaching out there.
Thank you. You too.
All right, let's go ahead. Ed is the best mentor you can find by Miguel Angel. Love it. Love it. Definitely the fans out there. Appreciate you guys joining in. Pre-market is pre-market prep. Yes, Joel, you guys can find Joel for his show, Closing the Print. I got my show now, Swing Trading Action. Not doing too bad on that Tesla trade. We'll see what happens. Let's get back to the action. We'll be joined a little bit later by Beat the Board. Excited to talk to a CMT, of course. You guys know I'm still trying to work on that CMT action. We got to keep pushing to the next level. Let's always keep working on our skills. Let's get back to the market. Let's take a peek into the SPY. How are we doing on the SPY? We keep dropping? Yeah, we keep dropping. We're now down to 406. Seems like we're really starting to break. Let's take a look at the leadership. Look at Microsoft really breaking. This was an interesting level for me to start looking for a cut down back because it's the extended trend line. And so one thing that I've talked about on Microsoft is that we've been in a nice, big, long weekly trend that we ended up breaking right around here. And it was right around September 16th. And that was around the 250 area. You can see multiple times we've made a move back towards that trend line and rejected. That's around the 270s right now. So that's one price that I'm really kind of keeping an eye on to see if Microsoft can truly get above that. If it can get above that, I think you get that breakout to 290 and 300. But if you can't hold above the 270s, I think you're going to start pulling back. And that's one thing that we need to keep in mind as we keep watching it. Now, another thing to keep in mind, I think, is you keep watching how the 200-day is here. Because I know that we saw a lot of bullish cross and golden cross on the overall market. But it seems like the 50 is trying to trend back to cross over the 200-day. But if we start getting some lagging price action or some price action to the downside, you're probably going to go ahead and see that 200-day start moving down. And that's not really the golden cross, right? I think that that's where people get a little bit confused. Even on the SPY, one thing that I've talked about is, are we going to start seeing that 200 actually move into the green? What I mean by moving into the green is actually going upwards. In the last couple of days, we're starting to tighten up that trend. I'm just looking to see if the 200 can make a move up. All right, let's get to some other outlook before we get to some other trades. And if you guys got swing trades in the chat, mention them. I'll take a look, or any tickers that you guys want to talk about. We'll get into it. Mitch, did you keep that Sox S trade on? Went green? No, I didn't keep the Sox S trade. I know that one was really nice. I got stop hunted on that one, and it would have been a really nice one, right? That one's going to be one that will kick me a little bit. Got stop hunted right there before the big breakout. That's how it is sometimes. But I don't swing trade Sox S. I'll tell you guys that. I don't ever swing trade leverage vehicles. And a lot of that is because of the daily rebalancing. You're not necessarily, like, it's not a good thing to swing these, I think. It's too much danger to swing these. But it doesn't mean you can't. But at the same time, I think these are more the day trading vehicles. All right, let's keep going. Let's take a look at some other trades. Looks like someone's mentioning the Beyond Meat. I'll take a look at some of my setups, but I'm willing to take some from you guys. Leo's looking at Beyond Meat. I'll tell you one thing. There's probably very rare people that were saying they wanted to short it at 200. I can definitely say I was part of that bunch. Didn't short it, though, when it was up there. I used to be always here, like when it was up here, like in the 180s and stuff. I used to be like, yo, how do people like this fake meat life? I don't know. Fake meat, fake profits. But hey, this was really the blow off top. And sometimes you get those blow off tops. Beyond Meat, for me, it's just going to be a very tough environment. The inflationary environment is not something that's going to support Beyond Meat. Can they survive? Maybe. But I would personally stay away from this because I don't see people buying kind of this type of expensive product in an inflationary environment, a tough environment for consumers. Yes, let's say maybe the higher upper class can keep buying this kind of stuff, but I just don't see it. If anything, I mean, you're seeing people switch from meat and going towards different meat products, right? Chicken, pork, not necessarily sticking to meat, let alone going for Beyond Meat, which is more expensive a lot of the times than those meat products. We'll see what happens there. Mitch, swing on win puts. Win puts. That's actually not a bad outlook there. That one's been ripping since November. That's had a 93% move. The only scary part with that is that you're dealing with pretty much China. China's such a hard one to short, right? Like I wanted to short Baba today, but it was a battle, man. I got stopped out of that thing multiple times, and now it's starting to go down. But I did see other Chinese stocks starting to crack down, like PDD, and I saw Baidu start coming back down. But let's go to that win. A lot of Macau exposure. Let's go to the hourly. They had an earnings report that kept them a little bit higher. I think, it's all about what you're looking at. Are you looking for a big move? Are you looking for just a cut back down? Definitely do think it could pull back, right? Maybe to that 100, but it did kind of base sideways there. And I think that that's an important thing to keep in mind, right? You did get some kind of levels here where you kind of went from below the 100, above the 100, and then started holding 100 on pullbacks. That's the level I think you got to watch. That's where I think you're going to have some people on the long side. If you cut through that 100 on puts, yeah, that will be looking good. Some people will be caught. All right, Tesla going down there to 205 already. And a little part of me gets that towards the point where I'm like, should I run towards the profits? No, I'm going to keep it break even on the rest and let it keep working, team. We'll see what happens there on Tesla. All right, team, we got a lot more to go to. We got about 20 minutes left here. We'll also have Beat the Board joining us in a little bit. Hit the bid out there. Hit the bid. We'll see what happens. Best day ever? Let us know about that one. What did you trade? All right, I swung TSLL. The Tesla Bull 1.5. We'll see how that one works out. You're against me, Jared, but guess what? Either way, I wish you the best, Jared. Whichever one wins, that's how it is. That's trading, man. Can't be mad about if someone's on the other side. Laura saying this is a bear trap. Is it a bear trap? Anyone swing for short? I'm swinging my Tesla. Disney, QQQ short. Let's hear it. All right, Disney, I saw it breaking down today. If you got it on that VWAP fade, oh, that was pretty. That VWAP fade right out the gates. I saw Disney come down right back above VWAP, then fade right back through the lows. And now you're getting that all-day type of fade. Look, never went back to the VWAP. That shows me a lot more how you got some traders stuck in that, and now you're coming right back through those levels. I really didn't like Disney's report. Big thing for me is that the cost savings just shows me that they don't want to invest in Disney Plus. Either that or they're waiting to invest in Disney Plus. And that doesn't give me confidence as they lost 1% of subscribers. So I can't blame you if you're swing short on this. One thing that I'll say about swing short, and sometimes we should take a look at it, is trying to involve more variables, right? Not only looking into the technicals, but also looking into the story. What's the story now with Disney? The story is, it seems like they're splitting their segment, focusing on certain areas to try to keep growing, right? Not focusing on Disney Plus in my mentality, because if you're going to cut content spending, that's how you bring the viewers. That's how you bring outside viewership into Disney Plus. That's why Netflix has a tendency of having these high name titles. Why? Because that's what brings people to the stream, right? Like some people probably went to Netflix because of Stranger Things, things like that. Those bring people to your streaming service. And if you're not going to have the content to be there, well, a lot of times you're going to take a step back. I know that there's a kids aspect out there, and that might help. But I'll tell you right now, that's just going to keep things moving along, because I don't really see also a lot of new kid content coming out. It's just more along the stuff that they had in the past. We'll see what happens. Bro, no trades to be made today. Swing trade in this market, says Christopher. We'll see what happens. At least I made some cash on Tesla. We'll see. All right, let's take a look there. Let's go to the SPY. I'm going to go through some other names that I'm looking at. In a second, we'll have Scott Brown join me. I'm excited to talk about that outlook. I did see a big reversal on the TLT today. think that's definitely important to catch, right? What is going on there? We're seeing the yields start jumping, right? Is this going to start trending right back down? Will this crack this kind of trend line right back to the downside? Keeping my eye here on the bonds, but there's one last sector that I wanted to talk, industry that I wanted to talk about, and that's going into footwear accessories, right? And so if you look here, this of course is going to be in your consumer cyclical area, the high beta names. There's one stock that I've been seeing really strong as of late that started to crack. And I think that's Nike. Nike's starting to pull back significantly here. So I'm keeping an eye on it. It's starting to break. And I'm starting to think about Foot Locker, because Foot Locker ran with that Nike news and they did get the pop off of their earnings and continued up. But my thing about Foot Locker is that I'm starting to see more and more, and I'll talk about the story, that it doesn't look good in the industry. Nike coming down, UA really got hit hard. And then so I'm thinking more and more as companies try to focus on cutting costs, will this move more to a DTC focus, direct to consumer, right? We've been seeing Nike do that already. And Foot Locker's worries have always come in with that. Well, I think as you see more and more focus going towards direct to consumer, I think Foot Locker isn't going to be as strong as many think. I do see a little down gap here that could fill. It could just fill this kind of down gap. We'll see if it kind of fills that down gap, starts to crack through the 45s. It was already breaking down earlier today, so that's why I didn't get to it. I wanted it to get back up here towards the VWAP, somewhere around, let's say, the 45-20 area on a bounce for a short. We'll see what happens there in Foot Locker. But that's enough in the footwear accessory stocks. The biggest, strongest stock has been Deck. We'll look to see if that one turns around. That's just been an absolute monster. And that's an outdoor footwear accessory company. All right, let's get out of my charts. I want to bring on my next guest here. Like always, team, I want to bring on different guests. Some will be more day traders. Some will know a lot. And this guy coming up right now has truly impressed me. Why? Because not only was he already doing things for LPL Financial before this, but he went on his own, took the risk. Let's bring on my man, Scott Brown, CMT. What's going on? How we doing? The guy with the best stash on Wall Street. May I say that? Look at that thing. How we doing,
Appreciate it,
Scott?
Money Mitch. Thanks for having me on, man.
Oh, it's good to have you on, man. And one thing I say that I always look up to CMTs that have gone through the process, especially young traders that went through that process. So definitely a shout out to you always, Scott, for doing that. I'm trying to get there myself. So hopefully one day I can have that title too. So it's good to have you on. Let's first talk about what Beat the Bench is, so those retail traders out there can know what it is.
Yeah, so Beat the Bench is on Substack, and anybody can subscribe. We've got free content, but the majority of it does go out to paid subscribers. But I put out 3 reports every single week, and it's mostly geared toward financial advisors, money managers, and sophisticated traders. But we cover the macro and the micro. So really starting at I know you were talking about this right at the beginning of the show, but it's really important to kind of know the environment you're in, kind of have that top down, what's happening with stocks, what's happening with the market, the dollar, bonds. And then from there, you drill down to the sectors, to the industries. And of course, we've got bottom up equity research as well.
Definitely. Let's go ahead. Let's get into the action. Don't know if you want to bring up your charts, Scott. So I'll let you go ahead and tell us a little bit about what you're seeing in the markets, especially because, I mean, your charts kick it out of the water. I see them all the time. So let's get to that action. If you want, you can share. If not, I can also pull it up from there.
Yeah,
there you go. I see you.
You can see me? All right,
yeah,
cool, man. So, first off, we got to start with what's happening today. The S&P 500, we got SPY up here, kind of breaking below a critical level. This is kind of the lows from Tuesday, the intraday lows we've just bled. I mean, that is one ugly, ugly candlestick. And it's actually a little bit more clean of a level if you look at the cash index, the S&P 500 below 4,100 as we speak. We've seen this kind of a lot over the past year where the index breaks out to a higher high, trades there for a couple days, and then falls below. So there's kind of the risk that we're doing that again. And I don't think it's any coincidence that's what's happening. You know, what's been falling throughout the day is stocks. What's been rising throughout the day, there's that intraday candle there for UUP, the dollar index. The dollar gapped lower, and then it's just risen throughout the day. The bigger picture here on the dollar, potential, and this is, looking over the past year, but potential for a false breakout. All of the stock strength that we've seen since October has been when the dollar's falling. So I think right now we've got this risk of a false breakdown. If there's more strength, if DXY goes up through 104, I think stocks could stumble in the near term. So I think we want to have that bias. Now we want to start going and looking at individual stocks. Maybe you want to have a little bit of a short-term negative bias.
Yeah, I could see that today, especially when I'm starting to look. I'll look at the basic materials. I see silver and gold down big today, and I start to think, what's going on here? Well, this explains a lot of the action that I'm seeing there. Gold has been strong, pretty strong since the beginning of the year, right? Is this a trade that we're going to start seeing go away? What do you think about gold?
Yeah, we'll see. Let's see if we can get it pulled up on the screen here. You're right. I mean, I don't think you can really be super enthused about gold. Ugly gap down there.
Yeah.
If you think the dollar has any sort of an upward bias, all this strength has come, basically perfectly inversely correlated, but the longer term trend is more constructive. I like gold. If we get up above here, start to get really interested in GLD. If we can push up towards the high 190s, and then you're talking about a year plus long breakout right here, kind of neutral. That's your kind of tactical low, 177. Maybe you can get up here and fill the gap at about 180 or 178 or so, but not seeing a whole lot in the GLD chart.
Yeah, definitely. I'm seeing called out in the chat about the market kind of breaking some EMAs today. I use the 9 EMA often on my daily charts too. I can see that start to close. And of course, I use that more to just kind of follow trends here. What about the trends like in tech that we're seeing here, right, Scott? It's been such a big rip. Is this more something bigger? Is this like kind of rotation going to tech? I start to think, right? Because that's why I was short earlier in the week. I was short a little bit of XOM, was able to get first profits, got break even on the rest. But I'm looking to see if maybe is rotation going to tech from energy? Where is it coming from? And do you think that it could stay strong?
So I think that it looks like the longer term, you've seen a pretty durable trend. I mean, here's QQQ. You've ended the downtrend line. Semiconductors, huge turn, especially in some bellwethers like NVIDIA. So I think longer term, you can be a little bit more bullish, but it doesn't mean we don't have shorter term problems. This is QQQ. We had kind of this gap up, called it out in our Monday playbook as a potential exhaustion gap. And it's really kind of looking just like that. It hasn't fully broken down yet, but I think kind of we're getting stretched relative to this 50-day moving average. We got up to about 10% up above the 50-day moving average. That's a pretty consistent ceiling for QQQ. So I wouldn't be surprised to see some more weakness. And I think everybody kind of expects stocks to be a little bit shaky ahead of CPI next week.
Where's the concerning point on the downside that the bears might have recontrol? What would you say that, Scott? Any level there?
For QQQ or the S&P 500?
Well, we could stay on the Qs since the Qs chart seems to be, I think, even cleaner of a breakout there.
Yeah, I mean, I think it's all about these December highs. So if you get below 285, 291s where that 200-day moving average is coming in, that's where you really start to have some problems. If you've broken out up above the December highs, because that was significant. If we lose that, there's not much support in here. You're just kind of best case is you're back in this range where you found the bottoms, but there's nothing to really call big picture support except for the lows.
Any sector or industry that you see opportunities out there right now?
Within healthcare, biotech looks really interesting. We made that trade in some of our models earlier this week, just taking some, it's been all about XLV and the defensive pharma names, but you've seen a pretty strong rotation into biotech. And so I like that trade over the course of the rest of the year. I think you got to be just really, really nimble and not get stuck too much on one particular sector or industry, because as I mentioned, you want to stack those time horizons. Ideally, you have all the time horizons working for you, but you've seen this big rotation. Last year was all about the defensives. They're the only thing that's worked. They're really oversold, and we're really oversold coming into this week. Another one of those signs for, hey, we might get some weakness, relative bounces for staples and healthcare and things like that. But tech is turned bigger picture, but is short-term exhausted. So you just kind of have this conflict in trends. I think you just got to kind of stay nimble, and maybe that's an environment that's, a little bit more attuned for swing trading.
Yeah, definitely. I think that's what we're seeing a lot this year. It seems like, we are going to get some swings in these sectors. I mean, especially when you're looking at like 1 month relative performance to last year's performance, it's completely different type of segments at the top, right? And I mean, I've been seeing the consumer cyclicals be really strong, but we know those are those high beta names, how quickly those can turn around. So I'm keeping my eyes on different areas there. It seems like also we've been seeing like, growth names come back, and whether you feel that's the best trade, I feel a little part of this could be a little bit of like early year seasonality coming into play, and value could be looking better down the line. What do you think about growth versus value trade there, Scott?
Yeah, I mean, like I said, I think you've got to respect the strength out of tech. I don't think it's just this simple little rally, and I think we've seen enough of a durable trend change in a lot of these like software and semiconductor names where you can't just write it off and say, oh, this is tax loss selling in January. Like a lot of these moves have really been shaping up for a couple of months, and they're just starting to decisively break out. Look at all the streamers and communication services. On the flip side, you look at some of the big value leaders outside of defensives, things like industrials. This is actually one, I think a good example. So this is Illinois Tool Works, maybe a kind of boring name, but it hasn't been boring since October or September. It's up about 40%. But what you see, and this is the same story with Caterpillar, Boeing, just a lot of these industrial names, it got up to about 20% up above its 200-day moving average. Except for coming off the great financial crisis lows, Illinois Tool Works gets 18% up above its 200-day moving average all the time. It never really gets much more than that. And so I think what you've seen is this huge kind of explosion in the cyclicals, but this is the kind of signal that's more intermediate term overbought and suggests it probably has to pause, not for a couple days or even a couple weeks, but maybe a couple months. And I think that does give an opportunity for growth stocks.
That's something to keep in mind, right? I've been keeping a close eye on those Cat, Deere, Pacar, all in the same space, ITW. Yeah, it's interesting charts. And I was watching to see if ITW was going to lag a little bit on those moves. And it started to play catch up. But then, yeah, you could clearly see gapped up, came right back in there. We'll look to see if it starts breaking back down. I've been looking also on Cat to see if that trend can hold. Looks like we're starting to reject the 250 area. That seems interesting to me on that Caterpillar. But Deere is going to be really the key there. What do we get on Deere? Do we get that back in the 400s? That's been an absolute monster.
Yeah, I mean, all of those, like I said, I think the hype, everybody really got on the Caterpillar and Deere trading all-time highs, and it was a good story. And I think it is hard to be so bearish when you see those stocks trading up that high. But yeah, you're right. Short term, I mean, this was just horrible momentum. The MACD is kind of breaking down there. So it kind of tells you you're probably not breaking out the new highs anytime soon. I think best case is you don't give up too much and you kind of reestablish some strength here. But we'll continue to watch a little bit. It's at least holding up better off its lows of the day and up above the early February lows. Look like about 406, 401 there, for Deere. So as long as we're above that, maybe you're okay. But it's hard to be super enthused about it right now.
Yeah. Any other one that you want to go ahead and bring up? If not, I got one last one that I maybe question about, but I'll let you go, Scott.
Yeah, I'll give you two quick ones.
Let's do it.
This is just melted down all throughout the day at a clear kind of important level, shooting against 118.18. Tried to bring my kind of swing ideas for you, a little bit bigger picture than the hourly stuff, but shooting, short this, using that as your stop. You got a MACD sell signal that's taken place right here after a pretty good run. Looks like, near-term negative bias against Disney. And then something that's actually working in a tough tape, Tyson Foods. Down here back at the lows, momentum has been diverging positively all the way since last year, second lower high in RSI 14. Obviously, probably a little bit more defensive play. It's been a horrible stock, but really trying to make a stand and going long against this using 59 as your stop. looks like, one of the few enticing things out there short term.
Yeah, it doesn't look bad at all, especially on a trade that's probably forgotten right now, except for those looking for that type of trade. It doesn't look bad at all. I will keep watching on that one. You can see that at 60 and 59 holding really well there. I also like the amount of volume that was traded on that down gap. That tells me a lot more there that maybe they're standing a wall there. We'll see what happens on that one. Like always, you guys can reach out to Scott Brown. I'm going to throw up his Twitter here in the chat. It's under Scott Charts, but definitely check him out. Check out Beat the Bench, and of course, reach out to him if you have any questions on chart. I'm sure he's always willing to answer. Scott, it's always great to have you on, and look forward to bringing you back.
Thanks, Mitch. Thanks for having me, and have a good one.
Always. Take care, Scott. All right, that's going to be definitely it for at least the interview side. We'll take a look into the market as we wrap up. Let's take a look. TSN. That one's interesting. I'm not going to lie. I looked at that and I was like, ooh, I'm going to put a line there. I'm going to keep that one on watch. We'll see what happens there on TSN. Let's go back to my swing trade on Tesla. We were able to take first profits. Where we at now, we're going back towards that 207 spot. So not mad that I took some profits at that 207. Now we'll look to see what happens. I already went and set my stop here for the upside action if I need to get stopped out on it. And we'll see if we continue on some downside. There was some stocks that I saw strong closing here. I do want to point out that CRM, not a bad day for it, right? Even though it's starting to come back down, I'll keep this one on radar. I've been seeing how strong it's been as of late. This one seems to me like a little bit of a better move to the upside. Of course, it could pull back to the 200-day. We'll see what happens. At least it's not the worst close there for CRM. All right, I'll take some stocks from the chat. Bruce, loving the new segments? Hey, that's what I'm trying to do. Always trying to improve the content and bring you guys something different. We're focused more on swing trading in this show. Sometimes we might miss certain other things, but we have plenty of other shows to do that. And if you guys have any traders, and I mean anybody out on Twitter that you guys want to see on here, calling out some swing trades, tell them to come on. That's what it's all about. Start swing trading. And one thing I always say is for the new traders out there, start looking into what swing trading is. If you only have day traded in the past, never has taken a swing trade, well, I definitely say you at least look into it, whether that be in your paper trading account, whatever it may be. Just take a look at it. I know that's where my bread and butter is. And I think every trader needs to understand one major thing. What do they trade best? Are they better swing traders than they are day traders? I can tell you right now, that would be me. I'm a way better swing trader than I am a day trader. I try to do my best in day trading. I don't do too bad. But a lot of the times, what happens in day trading for me is I'm just slightly into the green. Now, when I start taking a look at swing trading, that's really when I make my expansions and I've made my gains, right? Well, you guys find what's best for your personality and what works best. Why does it work for me? Because a lot of the times I can take good entries using my day trading skills and then let the trade work for me. Stop almost even watching the trade like I did on Tesla. I stopped watching it. I just was waiting for it to break down, take the profits, and then just keep moving on. We'll see if the market overall keeps breaking down. Looks like we are coming towards the 402. I didn't see the closing imbalances. So if you guys saw those out there, maybe we did have some sell imbalances. A lot of volume coming in here in the close. It was a tough day for the leadership today. Look at Microsoft's chart. That's letting go. Is the AI over? Is AI over? That was one of my swing trades that I called out earlier in the week that I'm a little upset I didn't grab, which was 28 on AI. 28 on AI would have been really nice. I had to risk that day to the high of the day, which would have been 31, but doesn't look bad at all if you guys were able to swing trade AI to the downside there. We'll see what happens on this trade. Google, really, did that break the AI movement? It could have been, right? I mean, look at that down move in Google the last 2 days. And the AI move has been a lot of hype. It's going to turn around at some point, team. It was just like the metaverse conversation, right? It was going to turn around at some point. We're going to see if this is really the turnaround. Unity was really strong today. Now starting to pull back. We'll look to see if that can hold on. And ARKK, Big red today. I was thinking maybe a SARK trade. I didn't take it today, but I do like kind of this level that you're getting kind of that reversal action off the 38s. This doesn't look too bad there on the SARK. This would be going against that ARKK, a different way to go about it, right? And then I was also looking at the solar names. EMP8 selling off some more. Should I go for the first solar short? We'll see what happens. I haven't taken it right now. I want to see if first solar tomorrow can come back up there towards 170. If that doesn't happen, I'll start knocking this one down. And like always, I'll let you guys know on all the swing trades. You guys can also keep up with me on live trading. Live trading is the show that starts at 9:05, goes to about 11, and then keeps going into AB, where he's going to start doing some trading interviews. That's what it's all about here. We're going to bring you all the trading action that you guys need to stay in the informational edge. I hope that you guys can learn from processed approach and up your skills. That's what it's all about. We're not here for copy trading. That's really what that's not what I'm here for. I'm not here because I want you guys to trade exactly what I'm trading. No, I want to learn from you guys. You guys want to learn from me, and we'll definitely bring on the trading experts out there that are making trades themselves and telling us about the strategies. You guys smash the like. We're wrapping up and bringing you guys over to Cannabis Insiders. We'll see you next time. And like always, let me know what you guys thought of this show. Start swing trading. We'll find out if we keep it. I want to see some feedback. Hit the comments after the show. See you next time, team. And don't forget, we do got a little bit of an earnings call tonight. I don't want you guys to miss that. That's going to be a little later today. But I'm bringing you guys over to Cannabis Insider. Find out what's going on in cannabis right now.